Today we are covering the top 5 bearish candlestick patterns that you can use on the TradingView platform. Welcome on into the TC Trading channel. Hope you guys are doing great. We're going to dive right on into things. So right now we are looking at TradingView. We've got our charts pulled up. We're going to look at a couple different stocks, I think 5 different stocks here in this video. And right now we're looking at SPX, the S&P 500 index. But what we want to look at first, and step 1 out of this whole process, is going to be understanding where to go to get access to these indicators, as we call them here. And they're essentially under the indicators tab up in the top right. Head up there, go down to indicators, click on that bad boy right there. Then you're going to see a bunch of different options. Go to technicals on the left-hand side. And then instead of clicking on indicators, strategies, volume profile, auto, go to candlestick patterns. Yes, candlestick patterns. You could click this button right here that says all candlestick patterns and see what's going to happen when I do so. Boom, look at our chart. Our chart is now loaded with different little symbols, a couple different letters that essentially signal different patterns. Now, you could just stop right there and be done if you wanted to, but what's the point of this video? I guess if you want to click off the video, then go ahead and do so right now. But today we're going to be covering 5 of the best bearish candlestick patterns that you can pull up and actually utilize. We'll talk about the uses of them, what to look for, make sure you got a good understanding of all that good stuff, and get you on your way, because there's actually an important interpretation aspect of this. Why? What do you guys see? What you'll see is that the blue actually happened to be bullish candlestick patterns, and the red happened to be bearish candlestick patterns, okay? You'll notice that we see a lot more red on the way up and a lot more blue on the way down, albeit a lot of the blue has come at relative lows and some of the reds came at relative highs across the S&P. But if you were to trade off of just those patterns, you probably would have lost money based off what we are seeing right here on the S&P 500. That's why there is use to interpretation. So we're going to get rid of that, and we're going to now pull up the candlestick patterns of choice that we've already pre-selected for you. If you guys are worried about TradingView and all that stuff, we've got some videos covering the different plans. If you want to use it, if you want to just use the free version, that is totally fine. If you are new, there's a link down below to a 30-day free trial. We use the premium version, which is the highest version that you can use. Essentially no limitations in terms of how many indicators you want to add to your charts, all that jazz. But you don't necessarily need to pay a ton of money on TradingView to get access to this stuff, and I want to make sure that that is number one made aware, because a lot of people feel like, oh my gosh, I gotta start paying for this and this and this, and you just don't need to do that stuff. It's just a lot of extra noise that's not going to actually help you, but hopefully we can help you out in this video, which we're going to start with number 1, and that is the Doji star. All right, so we're looking at Walmart right now over the past, I don't know, year, 2 years. And what you'll see by a Doji star is going to be indicated by a DS. And by the way, guys, under the indicators, right, you go back to that candlestick patterns, they're all going to be found under here. And if you ever want more information, more than this video is going to talk about in terms of what we're going to visually show you, which I think is actually more helpful, we're going to kind of condense down like the definition of these different candlesticks into like a format that you could actually visually see and interpret. Head over here, and then what you're going to do is, for example, for the Doji star, let's pull it up right here. Click on this little question mark to show the description, and the right-hand side, boom, you're going to have a picture, definition, inputs, all that stuff that's going to help you out in understanding what these indicators are. And if you want to look into other ones, there's certainly a lot more out there for you. So what we're looking for in a Doji star is we're looking for an uptrending stock, and we're looking for a reversal. So these bearish candlesticks, a lot of these candlesticks are actually going to be reversal patterns. And so let's look at the first DS, Doji star, that we're going to get right here. And what we want to see to essentially get the Doji star is a green candlestick followed by the next day a gap up and a Doji. And what we're looking for essentially is this exact interpretation, and it actually ended up working out. The second example did not, but this ended up working out. So what is this telling us? We have a uptrend. Okay, we're uptrending. Cool. We've got a green candlestick right there, this green guy right here. The next day we gap up. Okay, we gap up overnight in the overnight session. We're looking at the 1-year, 1-day chart here for Walmart. We gap up overnight and then put in a Doji. So a Doji, for example, I'll show you guys in this kind of nasty looking candle here. You've got buyers and sellers. This is kind of like your traditional candle, right? We open at the bottom of the candle, close at the top on a green candle, and vice versa on a red candle, which, by the way, we've got a video Candlesticks 101, something along those lines that covers all you need to know when it comes to candlestick patterns. Highly recommend you check that out on the channel already before we dive into this, which is kind of like more advanced. And we'll leave a link to that video in the video description box down below. So if you want to check it out now or back and forth, whatever you want to do, highly recommend, especially if you are new to candlesticks, okay? That's like your traditional candlestick, right? In some form of either red or green. Now, a doji is when you have a very small, or very, very minimal body, okay? And a big, long upper and lower wick, okay? So what this tells us is that price action, we opened and closed somewhere in here, okay? But we had price action all the way down to here and all the way up to here. So there was buyers that sent us up this way and then sellers that sent us down this way. So we had indecision, and that's what it says. It just says indecision. Which way are we going to go? And especially when it comes after or during what is already ongoing, a substantial uptrend or downtrend, these dojis could be reversal points. And so in this case of the doji star, we're looking for a uptrend, a green candle followed by a gap up and a doji forming, boom. And then we're looking for confirmation the next day of continuation or a gap fill back down and push down towards a relative low, obviously breaking the uptrend that we had previously had, which in this case we got on Walmart. Now, it doesn't always work because the doji star in this case, we got that and had a green candle right here followed by a gap up and that doji, but guess what? We ended up uptrending for a couple more weeks after that. So again, it's not always perfect, but what we are looking for is the confirmation the next day of downside. And if we don't get that in the next day or two, this is no longer a valid setup. And yes, we got an indication, hey, this could be a good idea. This could signal reversal, but if we don't get the confirmation, it's a no-go. For number two, we head over to the NASDAQ 100. And what we're going to do is we're going to pull up the BE, the bearish engulfing. This is by far and away one of the most common bearish patterns you're going to see in the stock market. If you pull this up and you highlight this up on your charts on TradingView, you're going to see a lot of BEs, okay? And BE stands for bearish engulfing. And what we're looking for is a candlestick that a red candlestick that completely engulfs a prior candle, okay? It could be a green or a red day, but the day before, but we're looking for a complete engulf of the prior candle. And obviously, we want to open above and close below. That would be a full engulfing of a candle here. And we have two examples just to the north on the NASDAQ right now, which we're going to pull up in just a second and kind of cover how these played out. So we have a move to the upside. Okay, cool. We don't necessarily need an uptrend here for this pattern to play out, but we have a candlestick that gets completely engulfed. Okay, so the entire wick, the entire body is completely engulfed by the next day. So in this situation is we have a day here on Friday the 19th on the bottom of our screen. That's what we can see. The next day, we open up here. We open substantially above the entirety of that day. The wicks, the high, the low, all that stuff, open, close. Doesn't matter if we trade up, if we have a wick or whatever, we trade up or down, but we end up trading down by the end of the day, and we close well below or just below, doesn't have to be well below, just below the prior day's low. That right there is a bearish engulfing, okay? So that is now there's two setups actually in pretty close to each other here on the NASDAQ. And this one right here is another example. Not super clear because it was almost not as we opened up just above the highs that day, but closed below the lows, not by a ton, but closed below those lows. And in both examples here, we ended up trading lower in the coming days and weeks after the bearish engulfing. I think a much higher likelihood and definitely a setup that is worth watching and adding to your arsenals in terms of playing the downside in the days and weeks to come after you see a bearish engulfing pop itself up. For number three, we head over to Apple and we are looking at TT. That is a tweezer top. So the first candle we're looking for is supposed to be long and green, okay? That's our uptrend. We're in an uptrend and the candle is long and green. It doesn't necessarily have to be in an uptrend, but we're looking for a green candlestick, okay? We get that one right here on this green guy right in there. The next candle is red, ideally, and the top lines up with right up along where the green top is. So the high essentially is a double top. So we're looking for roughly a double top high after a solid, strong green candle, okay? That says buyers came in and then were met by sellers and sellers took over, and then we're looking at that risk of where that high is, where the 2 candlesticks highs are, okay? Roughly that area is going to be our risk, okay? So if that breaks to the upside, that invalidates his play, and we're done. If not, continuation to the downside, and that's what we got right there on Apple. Number 4, we head over to end phase ENPH on the 1-day chart here. And again, guys, these candlesticks can be used on different time frames. Like, don't just look at the 1 day. We like looking at the 1 day because it's more so of a swing/day trade approach. And we say swing/day trade is that we're looking at these patterns and these different candlesticks, and they will then signal where our potential bias or thought process can be for the next day to see intraday patterns or continuations to the downside or reversal patterns to the downside the next day in terms of playing bearish setups. Doesn't necessarily have to be a swing trade, but they certainly could be swing trades when you look at the bigger time frames and looking at bigger picture patterns, like when we're looking at the daily chart here, the 1 year, 1 day chart. So this isn't a 1 year. We're looking at a 1 day. Each of these candlesticks is 1 day, okay? So end phase right here, we're looking at an SS, okay? That stands for shooting star, okay? That's SS. And what a shooting star essentially is going to give us is a candle. It's just one candle. It's not multiple candles. It's just one candle that opens, trades up, gives back all of the range to the upside, and then closes down towards near or below the lows, okay? That's what you're looking at in terms of a shooting star. So when we say shooting star, we have an opening, shoots up, and then gives it all back, and that's generally not a good sign. So that's telling you that buyers came in and then sellers took control, and what we saw here in end phase was a continuation to the downside for a couple more days after this shooting star was formed. Not as popular in terms of like a bearish pattern as, let's say, a bearish engulfing, but it does pop up from time to time, and it is something that is worthwhile in terms of watching going forward in your own trading and investing. Last but not least, we take you over to SMH. That is the semiconductor ETF here on the 1 day chart, and we are looking for a BH, a bearish harami candle. Now, this is a pattern that is also not very common. You're not going to see it all the time like a bearish engulfing, like you'll see a lot more often. But when you do see it, it could be really, really useful. So what is this pattern? It's a 2-day candlestick pattern, and what you're looking for is a green candle the first day. The second day, we're looking for a red candlestick that is completely engulfed by the open and the close of the prior candle. So this right here is your bearish harami. And what you're looking for is a break to the upside up over this upper high of the prior candle, right? Of that prior candle. And let's say we get this setup like we did right in here. A break over this high is your invalidation of this being bearish. And what we're looking for is a continuation to the downside. And eventually, a couple of days later, what do we get here on SMH? Well, we got no candlestick broke that high. And eventually, big time sell off to the downside, continuation, boom, the bearish harami strikes again. And just like that, guys, that was our 5 bearish candlestick patterns that you can add to your own trading and investing arsenals. Again, if you guys want that video going over candlesticks, how they work, what these even mean, and how to interpret this stuff in the first place, we've got a full video for you. We'll link it down below in the video description box. Like always, there'll be a link to TradingView if you want to get access to that. Free trial, check out their plans if you don't already have access. There'll be a link to that down below in the video description box if you're interested. And on top of that, other links, resources, interactive brokers if you guys want a broker that you can easily integrate into TradingView so you can trade on TradingView's charts with a broker like Interactive Brokers. We'll leave a link to them to sign up free down below as well. Thanks so much for watching, and we'll see you guys in the next one. Peace.